Thanks for tuning in for Building Blocks of Health Insurance. We are the Oregon Health Insurance Marketplace. Our main goal is to help Oregonians find their best affordable health coverage option and understand how to take advantage of all of the great included benefits.
Today we will be talking about different types of health coverage available to Oregonians, how to understand your coverage, reporting a change, and what to know for your taxes.
My name is Amy Coven, and I am an Outreach and Education Coordinator for the Marketplace. While I have done outreach in most areas of Oregon, I'm currently working mostly in the Willamette Valley and Lincoln County. I'm passionate about my role with the Marketplace because prior to working in this position, I knew very little about health coverage. I didn't know there was a difference between Medicare and Medicaid or what a premium or deductible was. While working in my previous role, I learned a great deal about health coverage options, financial assistance and eligibility, and how health insurance works. I am passionate about sharing this information with other Oregonians to clear the confusion and make everything easier to understand.
And I'm Janine Scholander. I am also an Outreach and Education Coordinator with the Marketplace and work mostly in the North Coast region of the state. I'm driven in my position and in the work that we do. I have a background in healthcare and have years of experience seeing the impacts of being uninsured and the implication that brings to families financially and in means of their health. In my current role, I feel rewarded seeing the positive impact our work has on the community, either through educating on knowledge gaps or presenting coverage options to someone that was sure they had none.
Let's kick off with talking about what health insurance and health coverage is. Many folks have heard of the term Obamacare, which actually refers to the Affordable Care and Patient Protection Act. We call it the Affordable Care Act, or ACA for short. The most visible parts of the ACA went into effect in 2014 and introduced new consumer protections and affordability programs. One of the most well-known parts of the ACA is that people cannot be denied coverage or charged more for plans based on pre-existing health conditions. This is really huge because there was no nationwide ban on denying someone coverage for everything from cancer to being prescribed ibuprofen. Or maybe the plan would cover you but would add on extra fees and charges to do so. This is no longer allowed. Health status questions can no longer be asked on applications for health coverage. Another provision of the ACA is that premiums can only be determined based on how many people in your family are enrolled in the plan, how old each enrolled family member is, whether those family members use tobacco, and where you live. Location factors in because provider prices vary regionally, and it's those costs that eventually show up in premiums. In addition, there are fewer members enrolled in rural areas, so the costs are spread among a smaller group, or risk pool. We won't go into detail about all of the provisions, but some other things that the ACA did include mandated that all health insurance companies must allow parents to keep kids on their plans until they're 26, if they choose to, strengthen the Medicare drug program for seniors, and prohibited gender bias in benefits.
Speaking of benefits, all plans available on HealthCare.gov must include 10 essential health benefits with no annual or lifetime limits. These benefits are a really large umbrella with many services that fall under them. For example, emergency services, maternity and newborn care, mental health and substance use disorder services, and prescription drug coverage are just a few.
Included in the essential health benefits are a long list of preventive services that are covered at no charge to the member as long as you're visiting an in-network provider. These services are intended to help keep you healthy by catching issues before they become more serious. This is a very abbreviated list, but can give you an idea of some of the covered services. Some of these services also have special caveats. For example, diet counseling may only be available to adults who are at risk for developing a chronic disease like diabetes. You should work with your doctor to determine which screening tests or services you may need. And remember, it's a screening when you are healthy. It will be covered at a different level if it's a test to diagnose an illness you already have symptoms for. That's another reason to work closely with your provider when you seek preventive care.
Often you will hear the terms health insurance and health coverage used interchangeably, and they do mean basically the same thing. However, usually when we refer to health insurance, typically refers to a plan that you pay for, while health coverage typically refers to any plan, including government-sponsored plans like Medicaid. There are a few different types of coverages available to Oregonians depending on their situation. An employer group health plan is a plan that is available to employees of a small or large employer. Employers can elect to offer coverage to their employees and sponsor part or all of the coverage. Some employers sponsor plans for just the employee, while others help pay for plans for the other family members as well. COBRA coverage is coverage that is a continuation of an employer group plan. Usually COBRA is offered to you if you leave your employer and are no longer able to keep your coverage through your employer. The cost for COBRA will be your portion of the premium plus anything your employer was subsidizing and an additional administrative fee of approximately 2%. We will talk more about Medicaid, Medicare, and individual plans in a few minutes.
Before we go on, we want to make sure everyone understands all of the terminology that is frequently used when discussing health insurance. A premium is the amount you pay for your health insurance plan, typically monthly. We like to compare the premium to rent because you'll pay the same throughout the year, but it may change from one year to the next. Coinsurance and copayment are both your share of the cost of a covered healthcare service, treatment, test, or prescription. Coinsurance is a percentage of the allowed amount billed, where copayment is a set dollar amount. The deductible is the amount you pay for healthcare services your health insurance plan covers before your health insurance plan begins to pay at a higher amount within the benefit year. The out-of-pocket maximum is the most you will pay for in-network services during a policy period, usually 1 year, before your plan starts to pay for 100% of covered services. It is very important to familiarize yourself with your specific plan's network. This is made up of the facilities, providers, pharmacies, and suppliers that your health insurer has contracted to provide health care services. Some plans will only cover services, treatment, and prescription costs when visiting an in-network facility or seeing an in-network provider.
Let's dive into the three main health insurance options that our team works on to some degree or another. The first is the Oregon Health Plan. This is a state-based medical coverage called Medicaid. The Oregon Health Plan is administered by the Oregon's Department of Human Services and Oregon Health Authority. If you're found eligible, you will have no premium, and the services are mostly 100% covered, so there are typically no out-of-pocket costs. Eligibility for the Oregon Health Plan is largely based on family income, tax household size, age of the applicant, and the applicant's immigration status. You can apply and enroll into the Oregon Health Plan at any time throughout the year.
When the ACA passed, some states chose to expand Medicaid. Oregon did. But what exactly does this mean? The expansion of Medicaid means that more Oregonians have access to affordable coverage. Any Oregonian that applies and falls within eligibility guidelines is placed on OHP right away. Prior to the expansion, many adults who were found eligible were placed into a lottery, and as people came off the Oregon Health Plan, new people could be added. This is no longer the case. If you're found eligible, you're able to take advantage of benefits right away. Eligibility income limits raised to 138% of the federal poverty level, which is a huge benefit for Oregonians. Lastly, the Oregon Health Plan now offers more comprehensive benefits, especially for adults.
Next up, Medicare. This is a health insurance program for people who are 65 years of age and older, and certain people under age 65 with disabilities. These folks usually have been on Social Security disability for more than 24 months. Medicare is a program that is administered federally, so you'd sign up through Social Security for Original Medicare. Social Security will send you an ID card with your Medicare beneficiary number. Generally, you sign up for Medicare during the initial enrollment period, which is the 7 months surrounding the month you turn 65. So if you turn 65 in August, you can enroll between May and November of that year. But we recommend taking action in the first 3 months so your coverage starts the first of the month when you turn 65 or become eligible. There are also 2 other periods when you can sign up or make changes. the general enrollment period, which is January 1st through March 31st each year, and after employer group health coverage ends.
We aren't going to get too far in the weeds with Medicare because it's a very complex program, but let's go over some of the highlights of each part of Medicare. Part A is what we call hospital coverage of Medicare. For most people, there is no premium, but it depends on if you or your spouse have earned enough work credits. Part A will cover care if you are admitted to the hospital, hospice, or home health. Part B is what we call medical coverage because it covers emergency room and urgent care visits, visits to your primary care provider, lab work, tests, durable medical equipment, and prescriptions that you can't give yourself. There is a monthly premium of about $135.50 and a deductible of $185 per year. These amounts do typically increase a little from year to year. Part D is a prescription drug coverage and covers all self-administered drugs. These are private plans, and out-of-pocket costs like premiums, co-pays, and current co-insurance can vary. Part C is also known as Medicare Advantage plans. They are also private plans with varying out-of-pocket costs and covered services. Medicare Advantage plans are similar to employer plans where they are specific networks, covered services, and out-of-pocket costs. Many of these plans include prescription drug coverage and other preventive services not covered by original Medicare like dental, vision, or hearing. The empty triangle at the top represents Medigap plans, also called supplement plans. These plans fill in the gap for charges that Medicare doesn't cover, like deductibles and coinsurance for Parts A and B. These plans pay after Medicare pays their part, so there is no special network to consider, but the plan premiums can vary largely based on age, gender, and health history.
Before you become eligible for Medicare, Medicaid is a benefit plan that provides health coverage. Many people know this program as the Oregon Health Plan. Once you are eligible for Medicare, Medicaid shifts to a financial assistance program called the Medicare Savings Program to help pay for things like Part B premiums and out-of-pocket costs. This program is available on a sliding scale. The state will help pay more costs associated with Medicare if you have lower income. If you are below the lowest income level, you qualify for both full Oregon Health Plan benefits alongside Medicare. If you qualify for QMB coverage, the state will pay for your Part B premiums and out-of-pocket costs. And with SMB and SMF, the state will pay for your Part B premium, but you are still responsible for any out-of-pocket costs like deductibles and coinsurance.
Individual plans are insurance plans that can be purchased through private insurance companies or the marketplace at HealthCare.gov. These plans can be purchased for an individual policyholder, a couple, or to cover a family. Although you can purchase plans directly through an insurance company, you can only apply for and receive financial assistance through the marketplace. It is important to ensure you are shopping at HealthCare.gov. There are websites that reference Obamacare or look like the marketplace and are not legitimate. You must shop at HealthCare.gov to be eligible for financial assistance.
You can apply and enroll or change plans each year during the annual open enrollment period, which is November 1st through December 15th. If you enroll before December 15th deadline, your coverage will start January 1st.
You can only shop and enroll in a plan outside of the open enrollment period if you experience a qualifying life event, such as having a baby, getting married, moving, or losing your health coverage involuntarily. Once you report your life event to the marketplace, they will tell you if you qualify for a special 60-day enrollment period. Make sure to check your paperwork to see if you need to submit any documentation to prove your life event.
Financial assistance is only available through the marketplace and is available on a sliding scale. The lower your income, the more assistance you may qualify for. There are two different types of financial assistance available through the marketplace: premium tax credits and cost-sharing reductions.
When you fill out an application, the system will calculate what is considered to be an affordable premium based on the information you enter. It then compares this amount to the cost of the second lowest cost silver plan in your area. If the second lowest cost solar plan is more expensive than what is considered affordable for you, it subtracts the two to determine how much in premium tax credits you qualify for. You can use those tax credits on any plan available to you through the marketplace. If you choose a plan with a lower premium, you will pay less for the premium, but other out-of-pocket costs may be more expensive. If you choose a plan with a higher premium, you will pay more for the premium, but other out-of-pocket costs may be less.
Premium tax credits can be applied to the premium throughout the year or claimed at the end of the year on your taxes. These tax credits are always reconciled at the end of the year, so it is important to update the marketplace if you have any changes that could affect your eligibility, such as income, address, or with a family. If you end up making more money throughout the year but do not report the increase to your income, you may have to pay back some of the credits you used throughout the year. The IRS will add this to any additional tax you owe or take it out of any refund amount. However, if your income ends up being lower throughout the year than you estimated on your application, you may get more tax credits back on your taxes. You will not receive a separate check for any additional tax credits you are owed. It will be added to any refund or taken out of any other tax payment you have due.
The second type of financial assistance is called cost-sharing reductions. If you qualify, you can lower the amount of out-of-pocket expenses you pay, including co-pays, deductibles, and your maximum out-of-pocket amount that you pay throughout the year. These reductions come in 3 tiers, with deeper savings coming to you if you have a lower estimated income amount. You must enroll in a silver tiered plan in order to take advantage of these savings unless you're enrolled in a federally recognized track.
Next, we're going to talk about the rules of health insurance, and more specifically surrounding eligibility for the Oregon Health Plan, the Marketplace, and the Medicare Savings Program. Eligibility for these programs are largely determined by the number of people in your tax household and your household's income. Those numbers are compared to the federal poverty limit, which is set by the Department of Health and Human Services annually. The income limits for Oregon Health Plan are higher for children through age 18 and pregnant women than they are for adults aged 19 to 64. Keep in mind that the Oregon Health Plan is available to all children regardless of immigration status as long as they meet other eligibility criteria. Adults must still meet immigration status requirements as well as other eligibility criteria. For more information, visit ohp.oregon.gov. The eligibility income limit for the Marketplace starts at 139%. Although some folks can shop and qualify for assistance below 138% if they do not qualify for full OHP benefits. You'll notice that someone who falls between 139 and 250% of the federal poverty level can be eligible for both premium tax credits and cost-sharing reductions. The Medicare Savings Program is available in tiers to any Medicaid beneficiary below 150% of the federal poverty level, as we discussed before.
The Summary of Benefits and Coverage document is available for all plans in a standardized format. The document summarizes the out-of-pocket costs and coverage. The Affordable Care Act mandates that the Summary of Benefits must be in easy-to-understand language so consumers are able to easily understand their plan's general out-of-pocket costs, services, and contact information. This document can be obtained on HealthCare.gov through your employer and requested from the plan. If you have specific questions about your plan, it's best to contact the plan directly.
Here is an example of the Summary of Benefits and Coverage document. You'll see that it clearly shows the insurance company name, plan name and type, deductible, out-of-pocket maximum, network information, and specialist information. It gives general information as well as more detailed breakdown. The Summary of Benefits and Coverage document is in standard format, so the document will look the same for most plans.
The following pages will list general plan information, typical services that the plan covers, and the out-of-pocket costs for those plan services for both in-network and out-of-network. Also included are other important plan details, like if you must meet your deductible before the plan will cover the service. You'll also find information about services that are not included or additional covered services outside of the 10 essential health benefits.
On one of the last pages, you'll find the sample care costs for how a plan would pay for 3 standard services: having a baby, managing type 2 diabetes, and a fracture. This information is meant to clarify how the plan handles the deductible, copay, coinsurance, and maximum out-of-pocket costs for each of these treatments. It is not meant to be a guarantee of costs that will be paid, as costs can vary depending on facility or provider.
The explanation of benefits is a detailed breakdown of what has been billed to the insurance company. It is not a bill that you need to pay. It does list all of the charges that have been billed to the insurance company. So it is important to check the EOB against what happened at your visit to ensure the correct services and charges were billed to the insurance company.
This is an example of one insurance carrier's explanation of benefits. Different companies may have different formats, but will contain the same information. You'll notice that the EOB includes information about that service date, claim information, and the description of the service provider and any procedure or treatment. You can check the billed amount, the maximum amount that the plan will pay for the service, based on contracts and agreements with the provider, and how much may have been paid by another insurance carrier based on coordinator of benefits, third-party liability, or workers' compensation. If any amount of the charges are not covered, you'll be able to see that amount, as well as any portion that was applied to deductible or charged as a copay or coinsurance to the patient. At the very bottom, you'll see how much is the patient's responsibility and how much the insurance company paid. But again, this is not a bill, and you should not pay anything until you receive a bill from the provider.
On any additional pages, you'll be able to see if there were any reasons for any discounts from the first page and information about the deductible. Most plans will have a deductible and out-of-pocket maximum amount for an individual member and for the whole family, depending on how many people are enrolled in the plan. Typically, the EOB will show how much of the deductible and maximum out-of-pocket have been satisfied and how much is remaining. You can also typically find plan and member details, plan contact information, and information about appeal rights and the process to file an appeal in the explanation of benefits.
HealthCare.gov is a one-stop website where you can apply for marketplace plans, financial assistance, and potential eligibility for the Oregon Health Plan. HealthCare.gov is the only place where you can apply and receive financial assistance to help you pay for your health plan. You can complete an application to determine your eligibility and window shop before you enroll in a plan.
Sometimes calling HealthCare.gov can have a wait time, but you can avoid that wait by logging in on your HealthCare.gov account. There you can complete an application, view messages, gather tax forms, enroll in plans, report any life changes, file an appeal or for an exemption, and update any communication information and preferences.
One of the most important things that you should know how to do, aside from apply and enroll in coverage, is how to report a life change. It is important to report life changes within 15 to 30 days depending on what coverage you have and what type of change you have experienced. If you have the Oregon Health Plan, we recommend contacting a community partner who can help you in person. You can also log into your Oregon eligibility systems at one.oregon.gov to submit your change and redetermine your eligibility for OHP. If you have coverage through the marketplace, we recommend getting help from a local insurance agent who can advocate for you and ensure your change is submitted correctly. If you'd like to do it yourself, you can log into your HealthCare.gov account, open your application, and click Report a Life Change.
When you file your taxes, you will want to ensure you report the coverage that you had throughout the year. You will receive one or more forms to show any coverage you had. What type of form you receive depends on the type of coverage that you had. The 1095A form shows any months that you had coverage through the marketplace and will help reconcile any tax credits that you received. The 1095B form shows any months that you had minimum essential coverage such as Medicaid or OHP, TRICARE, or plans purchased directly through an insurance company. The 1095C form will report any coverage that you had through an employer. The 1095 forms are similar to a W-2 because this form will be completed in its entirety and you or your CPA will use the information to complete your tax forms.
Sometimes we hear that folks think that it's less expensive to not have coverage. Let's look at some scenarios. In the first example, we are looking at a family of 4, ages 38, 37, 10, and 8, living in rural northeastern Oregon. This family earns about $60,000 a year before deductions and taxes. This family will qualify for $697 per month in tax credits and cost-sharing reductions, which means their monthly premium is $373 for a silver level plan with a maximum out-of-pocket of $12,600 for the entire family. In the second scenario, we're looking at a single 25-year-old male with no dependents who also lives in Northeast Oregon. He earns about $25,000 a year gross, and he's eligible for $299 in tax credits per month and cost-sharing reductions. So a silver plan will cost about $143 per month. The most he will pay out of pocket for services is $6,300. So now you may be thinking, so what? That's a lot of money. Well, it may seem like it, but let's look at the estimated median cost of some standard procedures in Oregon. Let's say that otherwise healthy 25-year-old has gallbladder issues. It may run him almost $25,000 to get his gallbladder removed without insurance. That's a hefty bill that could be avoided, not to mention all of the free preventative services available, even if he has not yet met his deductible.
Have questions? We are here to help. The Oregon Health Insurance Marketplace is a state agency who can help give you information about your options and help you find local assistance. We are available toll-free at 855-268-3767 Monday through Friday from 8 a.m. to 5 p.m. and online at Oregon.Health.gov.
Oregon's Department of Human Services and Oregon Health Authority administer the Oregon Health Plan and can help answer your application questions by calling 800-699-9075. This number is also toll-free and open Monday through Friday from 8 a.m. to 5 p.m. OHP information can also be found online at ohp.oregon.gov.
Last but not least, if you have questions about Medicare and what options are available, we recommend meeting with one of our senior health insurance benefits assistance counselors. You can find a local office by calling Sheba at 800-722-4134 and typing your zip code in your telephone keypad at the prompt. We are also available to answer questions at our state office by calling the same toll-free number on Monday through Friday from 8 a.m. to 5 p.m. You can also find a whole bunch of Medicare information by visiting MedicareStartsAt65.org.
Thank you for watching this video. We hope it clears up your questions about health insurance options and understanding your coverage. If you need help finding a local community partner, an insurance agent, or would like more information, check out HealthCare.gov. Visit our YouTube channel for more helpful videos.